Good morning, this is Bakes, Kevin Baker with Bakes Takes. Welcome to the podcast. This is for the week ending Saturday, June 13th, and let's get into it. Number one, if you listen to David Portnoy from Barstool Sports for your Robinhood trades, at least listen to us as well. We put all of our rationale behind anything we do and recommend, and I'll do it right now. Number two, we own 10% each of the short-term futures pro shares. The VIXY is the symbol, and VIXM is the medium-term futures. Very pretty charts, volume picking up, and volatility is likely to increase. Number three, Jeremy Grantham, in a great podcast with Patrick O'Shaughnessy, talks, the one line that keeps reverberating in my head is, we're at the top 10% of market valuation and the bottom 10% economy that we've seen. So, crazy times. And let's go to the VIXM. This is the medium-term futures. It's an average of the next 5 months of futures contracts. If you want to get into the weeds on that later, I will. But this is what we talked about last week. And this is what I mean about, we'll show you our rationale. Look at the volume spike on this, that blue volume that you see in the lower right. Really picking up on one day. It's a very impressive base, and I said I'm not really sure why, but the volume's impressive, 5 times normal, and it's one of the prettiest charts I've seen. I tweeted about this last Thursday. We bought 10% each. The volume is picking up again. I'm looking at the blue volume. Picking up above the 50-day. Have more work to do, but I'm encouraged by this, especially because the monthly looks so great, which I think is my next chart. Here's the monthly, and this is the short-term futures. This is a 10-year trend. It peaked back in probably March 09, looking at it closely. The up volume is very promising, and we clearly broke the downtrend, as you see. And here's the medium-term futures. We're forming a base. We've gone from 400 to 20. Now it's around $40 or so. And any kind of retracement we see from this, I think is going to be very profitable. I think it's very likely. Anytime, and this is just an aside, anytime there's any question about the Fed stopping to buy anything. There was a comment yesterday about they might at some point slow their purchases of corporate bonds, and the market just swooned as soon as they say that. I think back of 2018 when they said we're going to be, they tried to get the balance sheet down from 4.3 trillion down to 3.8, and the market hated it, couldn't take it. So if the Fed ever says we're going to slow things up, I think that the volatility is going to pick up. Beijing is talking about COVID escalating. North Korea is flexing its muscles again. So I think that volatility up and down is likely to pick up, especially as we go into the election year, which, by the way, is 5 months away. Anyway, last week there was a lot of talk. Robinhood was a huge Google search item. This thought is that everybody's quarantining, they're bored, they've got a Robinhood account, it's free to trade, and people are bidding up crazy stocks to crazy prices with no analysis whatsoever, and I'm pretty sure that there's probably rules against 10-year-olds day trading, but it's happening. And it's gonna end badly, and we'll go into some of the extremes. But again, if you're on Robinhood or any of the other platforms, please use us because we show you what we're doing all along the way and give you the rationale. And if you say I don't like your rationale, then don't do it. That's okay. But we tell you exactly why we're thinking the way we're thinking and putting on trades the way we're putting on trades. Anyway. Please subscribe, share, ask questions. Again, this is a great tweet from Jesse Felder. Robinhood added 3 million funded accounts in the first 4 months of 2020, and half of the customers opened up their accounts they were first-time investors. So Dave Portnoy, you probably have seen him. He's the Barstool guy. Leave it here, please, for a second. The Barstool fellow, he's basically saying Warren Buffett's washed up. Day trading is easy. And I kind of feel like he might be the bishop in Caddyshack that blasphemes and is hit by lightning. This is sort of like spitting on stepping on Superman's cape again, and he can do it. It's up to him. But Warren Buffett's got $65 billion more than he does. So I think that this is going to be interesting. And you could making money consistently day trading. I haven't seen it. Yes, you can pull off some good trades. God bless him. I hope it works out. If you're going to do some short-term trading, please don't use margin, and please use stop losses so that your mistakes don't hurt you that much. That's why we try to be at 10%. If we have something move 20% against us, the portfolio is down 2%. And we've got 98% of our capital to go fight another day, and hopefully our winners more than make up for our losses in dramatic fashion. Please stay away from the Hertzes, the Chesapeakes, these bankrupt companies. The debt markets are telling you that the stock should not be worth anything, and I would just be very, very careful. Yeah, in Barron's this week, I think it's Randall Forsyth, talked about this, where you saw Hertz scream up 100% or more. They're bankrupt. The bonds are trading at 30-40 cents on the dollars, so that implies that the stock should be a zero, and people are out there pumping it up, and it's not going to end well. It's not going to end well. So just be careful. Chesapeake is going to announce bankruptcy pretty soon. It's the same kind of thing. My good friend Doug from Pennsylvania sent me this note. Vanguard is drawing younger investors with a new robo service, and it sounds a little bit like Robinhood, probably less speculative. And I'd love to know what you think. Who's used it? I haven't seen it yet. I haven't built an account. I'd love to know the pros and cons from all of these platforms that you're seeing in the trenches. And let's have a discussion about what's the best. Maybe we'll do a survey at some point down the road, Mike.
Absolutely, yeah.
And I think it'd be a great service to find out what people are using. And it might not be one is best for everybody, but Robinhood, Schwab, Fidelity is promoting fractional shares on TV all over the place.
Yeah.
If you see that, Betterment, Acorn, Wealthfront, TD Ameritrade, E-Trade, Personal Capital, Stash, M1 Finance. There's a lot to choose. Wow. Wealthsimple, Bloom, and I'd love your feedback. And I know you're a Robinhood fellow. I don't know if there's anything else that you...
There was no personal preference. It was just the first one I started with.
Okay.
So, I'd love to hear from other people as well and find out if there's better versions or why they chose them.
Yeah. I think we'll put out a survey and find out what people like and don't like about each. And all the trades are free now. It started with Robinhood, and now everybody's matching them. I think fractional shares has become, commonplace. So it democratizes investing, but it also, gives kerosene and matches to people sometimes too. So,
like 10-year-olds?
Huh?
Like 10-year-olds?
Like 10-year-olds.
Yeah.
That's not going to end well, I don't think. But here we go. The Chart Store put up a great tweet about, again, Robinhood traders. This has been the talk on CNBC, a huge Google search item. And the small options traders are buying way more calls than puts, and it's the most ever. And it just shows really, really bullish sentiment, extreme bullish bets. And, you can see here, it's way above the 2018 peak. It's taken out the late 90s, and I almost can't believe what I'm seeing, given Jeremy Grantham's comments. We'll get to in a minute. But anyway, and again, I go through all of these charts, and I really try to check my bias at the door. But, facts are facts, charts are charts, data is data. And when people are betting this much on calls, it's an extreme level. It doesn't mean an Armageddon's coming, but it means that sentiment is pretty frothy right now, and proceed with caution. Patrick O'Shaughnessy has a great podcast. He interviewed Jeremy Grantham. Jeremy Grantham has been doing this forever, I think at least 40, 50 years, is a value investor, tends to be early, which he will admit, tends to be, often seen as bearish in the financial press. But again, he manages billions of dollars and has been doing it for a long time, so a lot of people like him. The one thing that reverberated to me was he at one point said, I can't time this exactly, I'm paraphrasing, but we're at the top decile, top 10% of market valuation versus history, and we're at the bottom 10% of the economy in history. And the Fed is obviously producing a tremendous amount of liquidity, and there's a lot of stimulus to offset these two, but it just seems something's going to give, and I don't know what it is. Maybe the economy rips and becomes the top 10% economy next year. I think that seems unlikely, but it's a great podcast. I recommend it, and I want to be symbiotic and help other people's podcasts if possible. This is from Willie to Wish. The PE ratio. This is a Ned Davis chart too, by the way. Ned Davis is a great. I've met him a few times. Great researcher, very thoughtful. He's the one that uses the phrase that I used last week, this being right and making money. Believe he wrote a book on that topic. And this is just history. And we're not at the absolute zenith right now, but based on the median PE, stocks are heading back into overvalued territory. I just think it's a great historical perspective. Yes, you have to divide by bond yields maybe to account for some of this, but here's where we are in terms of the median PE ratio, with the E being suspicious, I think, for a lot of companies. This is Yuka Lewis. I don't know how I'm pronouncing that correctly. I thought this was fascinating. And again, I do look for bullish charts. I really do. But this is what I came up with this week. The NASDAQ daily sentiment is at 94. And I don't really know the ins and outs of what goes into the daily sentiment. It might be put call ratios. I'll look at that. I don't know. 3 months ago, this was at 4. 3 months ago, it was at 4. Now we're at 94. And every time we've been at this 93 plus level, we've gone down. 17%, 7.5, 12, 12, 8, and 30 recently. So maybe it doesn't happen this time, but the last 6 times we've been here, that's been the result. And just to be a little bit quirky with this, again, the election is 5 months away, and if the stock market is down, it's President Biden. And so we'll see what happens. See it market. This is they're talking about resistance, which we've talked about in the past, and I've had questions about from my sons and others. This is the XLF, the financials, and it dovetails with what we talked about, where it looks like it's rallied into resistance. I think the volume is suspect, and if it resolves to the downside, meaning the XLF, the SEF, the ETF that shorts the financials, could really work. We have not done that yet. We're not there yet, but I'm watching it. I'm watching it very closely. Tom McClellan, very thoughtful guy, and I like his work. And this is my checking my bias at the door. The advanced decline line of the New York Stock Exchange made a new all-time high on June 5th. I have not updated this chart now that it's June 13th, 14th. But that's bullish, and at least it was on June 5th. And I've got to put it up there as a part of the bullish column. The daily up-down volume line did the same thing on the 8th, and I agree with him. It's bullish. And, that's, I believe, every stock on the New York Stock Exchange. It might be market cap weighted, so it's led by some of the giants that have, been holding up well with the COVID-19 trade. But that's where we are. Yeah, and I wanted to update 60-40 and give perspective. And what I want to show is I think you ought to have again, I keep beating this dead horse, but I'm going to. If you have an advisor you like, trust, and respect, you have a 60-40 strategy or some variation. 60% stocks, 40% bonds. I like 50-30-10-10. I'll talk about that like I did back in September. But this shows how usually there's offsetting action. If the stocks go down, the bonds go up. Year to date, with this big rally that people are so excited about, the S&P is down 6.4%. Stocks haven't made money. Bonds are up 5%. And so when you blend all of this, the 60-40 portfolio is down 1.9. It's a heck of a lot better than down 33, where we were not too long ago. But again, stocks haven't made money. Bonds have. And that's the 60-40 portfolio up till this point in time. And it's, half the year's over. So, if we're going to make money this year, we're going to have to make up some ground. In September, I just said that the stock market was the oldest ever. That's a fact. We hadn't seen what we've seen happen in bonds with negative interest rates in Japan and Germany, etc. And we didn't see interest rates come down as rapidly in the U.S. ever in history. And so I just said, we don't have a playbook for this, really. And so it makes some sense to increase your cash exposure 5 to 10, gold 5 to 10, and it helped. It's still down, but the gold portion is up 13.6 year to date. Cash is obviously zero, and this portfolio is down 0.4%. And I just put that out there to show you that diversification works. Most of the time, bonds and stocks move against each other. There are some brief periods where that doesn't happen, and we'll go into that at some point in the future. But that's where we are right now. Macro Charts put up a great tweet, and I was going to be a little bit glib and say, "What's a magazine?" Because right.
At this point, yeah. What is a magazine?
And this used to be better. Paul Macrae Montgomery was a really good analyst, and he had the magazine cover indicator. And it was better when there was Newsweek and Time and non-business magazines, and whenever they had a particularly bullish or bearish cover regarding stocks or bonds or oil or gold or what have you, you wanted to bet the other way. And so here we are, and there is I believe it's Bloomberg, which is now Newsweek Bob Bloomberg, I believe. I can't see that cover. But it talks about, you don't know what's going to happen tomorrow or the day after, but you have to take advantage of what you can. Pretty bullish argument for stocks, but it happened after a 40% bounce. So just another thing to put in the contrarian camp and the cautious camp. Jesse Felder, I like his tweets a great deal. He put up the cities panic euphoria model, and I don't really know what's in that. I didn't have time to go through the machinations there, but it's pretty simple. Number one, my eyes are drawn to when you see anything that takes out a prior peak. I'm attracted to that. And the track record, when you get above euphoria level, 80% probability stocks will lower 1 year later. And that's just, those are the numbers. So please subscribe, review, share my Bakes Takes podcast on Apple, Spotify, your preferred platform. Please also subscribe to my Bakes Takes YouTube channel. The audio is the same, but the charts that I reference are on the screen. Follow us on Twitter @BakesTakes_ and other social media. Please use your voice memo app. Tape your questions, email to bakes@bakestakespodcast.com or write if you prefer. I will also keep you anonymous if you'd like. Thank you for listening. Mike Wilson is my producer. Have a great week. This is Bakes. And for much needed levity, again, please click on this and go to Chris Porter's YouTube channel. Very funny guy. This is largely clean. I don't know if it's perfectly clean, full disclosure. But Wonka me, he'll explain it to you. And I just like to hopefully share some laughs in some serious times. So see you next week. Thanks again. This is Bakes. Bye now.